how might be this is one of the worst investment you might take. I don't know. I'm really scared of this company. Hello. Good morning. Welcome everyone. Welcome for the morning business brew where we talk about stocks, companies, money and how make more money. It's me Rami Rashid and today I would like to talk to you about Kupang. The biggest IPO from Asia in US since Alibaba. Is it worth the hype? What do you think? Are you gonna cope or not? Are you gonna buy? Are you not? So let's. I said I would like to do some research for myself before I come and buy the stock. So let's dive in and let's do a quick comparison between Coupang and the other e-commerce players across the world. But first, let's talk about Kupang. For anybody who doesn't know, Kupang basically is the leading e-commerce platform in South Korea. Right, so they are the number one leading e-commerce in South Korea. They started in 2010, I think. So they're relatively new, and they took market share very quickly from Amazon. And if you don't know, South Korea is gonna be the biggest e-commerce market, the third biggest e-commerce market in the world by 2020, end of 2021. So there are almost around 50 million population in South Korea, but the internet penetration is very high. The population from the youngest to the eldest, they have smartphones, they have access to internet, so it's very well educated country as well and people. And e-commerce plays very big thing part in their life. All right, so let's have a look and see what we feel about Kupang and other players e-commerce worldwide. Okay, let me just record my screen and action. All right. So, the number one worldwide lead is Amazon. Amazon stock price is $3,000. Market cap is 1 trillion.5 and revenue $386 billion. Crazy Amazon. The net by the end of the year by $21 billion. Earning per share is 41, so each share of Amazon equivalent of $41, which is good. And PE ratio is around 73, which is a little bit high, but it depends usually on the industry. Now we know Amazon is everywhere, literally. So that's the problem when comparing these companies together. Amazon's main cash money ATM is AWS. Yes, correct. And basically the e-commerce and the logistics always bleeding money. But they have a lot of things like Audible, IMDb, whatever. Amazon Prime. So they have a lot of products. By the way, I'm just drinking coffee. Amazon founded in 1994. Now let's talk about Alibaba. Alibaba is worldwide, but it's based in China, but it's worldwide. It has the price is around 229. Market cap is 627, and revenue is around 93 billion, and net 11 billion. So they net more than the percentage they net is a lot more than Amazon, by the way, which means that the way they work is a lot more than Amazon. And their earning per share is $8, and PE ratio is 26. 26, yes, correct. Then we have from Africa, the lead star from Africa. Well, a lot of people say this is a European company that acts in Africa. Yeah, Jumia, the troubled Jumia company. It's now $46, market cap 3.4 billion, and net is minus. They're still in minus, and they're still in minus, of course. And on this, we all know about the Jumia saga and how they have a lot of issues. They are faking the numbers. They have a lot of stuff, on Jumia. Jumia needs just one full episode just to talk about how might be this is one of the worst investments you might take. I don't know. I'm really scared of this company. Then we have Mercado Libre. Mercado Libre. I think the free market in English, which is South America, Latin America. So stock price is 1,578 billion market cap, revenue 3 billion, and you can see they are still in the minus as well. Then we go to JD.com. $83 right now. Earning per share is 4.7, and their PE ratio is 17. By the way, their net is 7 also, and they were launched in 2016. When you have a look on all these companies, and you can see how the e-commerce industry suffers, they honestly suffer. They had to diversify. Maybe you can say that the e-commerce is kind of a branding. So Amazon's cash money is AWS. Alibaba's cash money is Alipay. Alibaba cash money is Alipay. Jumia is not making money, but by the way, their pay as well is making money. Mercado Libre, I haven't gone through a lot. It didn't seem interesting to me. JD.com, e-commerce is doing good. Kupang. Now Kupang is stock price around 49.50 yesterday. Market cap is 84 billion. It's quite huge a little bit. Revenue is 11 billion, so they made 11 billion in 2020, and their net was minus 500 million dollars. All right, so the number seems nice. But what I like about Kupang is their market share. They're beating Amazon so hard in South Korea. So hard. If you can see in the last 12 months, the search trends for Kupang, now you can see the Korean term here in yellow, and the Kupang in English are beating anything. Right, even the Amazon in Korean, it's speaking, but Kupang is by far leading the Korean market, which is good. All right, so 50 million users. All right, so they say 70% of the population just live 10 minutes away from the warehouse. So, which means they have rocket delivery. That's what made them different from Amazon. And basically, they are a logistics company more than e-commerce. So it's like a marketplace, and basically like Amazon. So they don't have their own products yet. So maybe that's a potential growth that they're gonna have later on. Good question. What they have growth later on? They acquired a streaming platform. Amazon Prime. Hello. A Singaporean streaming service.
What's Optimus Prime? Hello. What?
Amazon Prime is different, Baba, not Optimus Prime. Okay?
Yeah, okay.
Then, which means they're trying to diversify now. They have another streaming income. Then they had Uber competing with Uber Eats, with Kupang Eat. Yes, they are a logistic company. It makes sense to do food, groceries, and maybe humans very soon, which is a very good, smart idea from Rami. All right, so let's see their sales revenue from 2013 until now. That's amazing. Look at the numbers. Growth. And 2018, 2019, almost 100% growth. So, yeah, they're gaining market share. Crazy. We talked about Kupang Eat, so let's see how is Kupang Eat with millennials and Gen Z in South Korea. Now the first thing is Beeman, then Yogyo, then I don't know what is that, and then Kupang. Kupang Eat is number 5 on the list, which is not bad, honestly. Number 5, not bad. Yeah, so that's it for Kupang. They are now priced at $50 almost, and with a market cap 84. I can see their now when they got the money, they're gonna expand heavily. They're gonna invest heavily in the logistics. And let's honestly say it, when Mayosi Sun, when SoftBank invests in something, it usually do well. It usually does well, right? It usually does well. So yeah, this is it for Kupang. I think it's a very interesting company. I just want to see everything can become a little bit more clear when they report their first quarter revenue in the next month, right? Or month or so. All right. Thank you very much. Thank you for watching the Morning Business Show, and see you again later.
Yeah,
Bye.
bye.
Don't forget to subscribe, like, save, comment, whatever you like. And thank you very much.